Today, let's take a look at the nonsense and the shenanigans that happens on centralized cryptocurrency exchanges, such as fake volume, wash trading, ticker stuffing, and how you, the trader, how you, the retail investor, can actually protect yourself and make sure that you don't get damaged by a lot of the nonsense that happens in the cryptocurrency world. What's going on, everybody? It's your boy, Crypto Bobby. I hope you are having a great day, great night, wherever you are watching or listening in from. And yes, today we are diving into the seedy underbelly of cryptocurrency exchanges. And this is a conversation with my friend Clay Collins, who is the CEO of Nomics. They are a clean data provider and API company for the cryptocurrency space. They have their own free website and they sell an API that actually has verified data essentially to professional, institutional, sophisticated traders and such. These are really good perspective on a lot of the negative things that are happening on some of these centralized cryptocurrency exchanges, as well as the positive things that are going on in the space as well. I think you're really going to enjoy this discussion. So let's hop into that conversation with Clay. I think one of the things that we've been talking about a lot lately and has been brought to light, at least like from an industry perspective, I think a lot of people behind the scenes knew was happening. But one of the big things that really pushed this topic of conversation forward was the Bitwise report that came out that really kind of unveiled the curtains a little bit on what was happening on some of these cryptocurrency exchanges and got the industry talking. Would love to have your take at a high level about kind of what that Bitwise report was about and just your general thoughts on it.
Yeah. So, first and foremost, I think this report did so much for the industry and really kind of kicked everyone's ass. Ours included. It's a really positive thing. So they said a couple things that were really interesting. The first thing is that they said, which was kind of shocking, is that there were only 10 exchanges that had actual volume. That needs to be qualified a lot. So first off, they don't actually define what actual volume is, but the implication is that there's only 10 exchanges that don't have a preponderance of fake volume. So what did they look at in this Bitwise report? So they looked at exchanges that had Bitcoin volume. So as far as we know, they were only looking at exchanges with order books. So like local Bitcoins wouldn't count, and like Shapeshift wouldn't count because they don't have centralized order books. So exchanges with order books and exchanges and on those exchanges, they looked at exchanges with BTC to Tether or BTC to USD pairs. So they weren't looking at the entire universe. They weren't looking at decentralized exchanges because most of those are just, they just have ERC20 and Ethereum trading. So they just look at these specific Bitcoin markets on centralized exchanges, and they started with and they only looked at the top like 81 exchanges on CoinMarketCap. So there's a lot of sort of filters on what they looked at, but still the overwhelming evidence here is that wash trading is rampant. Volume as a service is rampant. A lot of these services being provided by like liquidity providers or market makers. A lot of this is there's definitely a seedy underbelly, right, to not only what's happening on these exchanges, but the world of spam. So the first finding was only 10 out of 81 exchanges had real volume. I question a little bit that there's just 10. There appears to be a little bit of like base 10 bias, like why not 9 or 11? 10 seems kind of convenient. They reported that 95% of volume on the BTC to Tether and BTC to USD pairs, 95% of volume was fake. And it's interesting. It's a cool report. There's a lot you can learn from the report about how fake volume works, but this rabbit hole goes so much deeper.
Yeah, so let's get a little bit deeper on that, I think, and this is going to be the name of the video and podcast, is the CD. You threw that out there, now it's the name, but the seedy underbelly of cryptocurrency exchanges. So we'll roll with that. But taking back the covers on that kind of just main base layer, that, okay, there are maybe only a handful of these 90 exchanges that were looked at that are actually really trading crypto or Bitcoin specifically But then
Yep.
I'm sure a lot of that also applies to a vast number of altcoins, maybe even more so than of the altcoins too. When you look at it, how is this like taking place? What is going on that is driving this fake volume? I know one thing you mentioned was this like liquidity as a service, these market makers. Like what is happening on these exchanges that just produces all this fake volume?
Yeah. So great question. I think the first thing that we need to do when sort of considering what's happening here is to start using the name spam. People are referring to wash trading or toxic activity and all kinds of maybe sublimated terms, but this is at the end of the day, this is spam, and a lot of what's happening here is people gaming the system so they can get to the top of the coin market cap rankings. So a couple days ago, I was at Coin Market Cap. I was looking at the list of top exchanges, and everyone says, it's like Binance is the top exchange, and I couldn't see Binance in the top 10. Now it looks like they've done some things to improve it there, but most of the exchanges that I saw in on the exchange rankings were exchanges that like I've never heard of, or like I could call everyone I know and they could call everyone they knew, and like nobody has ever placed trades on these exchanges. So why is this spamming happening? There's a lot of reasons. When an exchange is at the top of the list, first and foremost, they get traffic. So a lot of these aggregators link directly to the markets pages for these, for trading pairs. So it generates traffic for them. And in some cases, it can become a self-fulfilling prophecy. You spam your way to the top of the list, you get more traffic, there's more liquidity, and you start getting maybe more organic trading happening on your platform. Another reason is, when they're at the top of these lists, they can charge huge listing fees to ICOs. They can run IEOs for coins, and this is something we're seeing a lot more recently, where exchanges like Binance will take a cryptocurrency project, like not public, but they'll handle the public offering and charge a cut. And often they're making seven figures plus, for these types of deals. Um, so there's a lot that they get out of this. When exchanges rank higher on let's say Coin Market Cap, now they're on the first page of the exchange index, which means that they're more likely, that the link that they get from CoinMarketCap is more valuable from an SEO perspective. There's so many reasons why they might do this. Free advertising. There's a lot going on here. So I was thinking about like what this is. At the end of the day, what should this be called? And yeah, and I was like, I don't want to call this wash trading or toxic activity. I was like, this is exchange spamming. And there's a subset of exchange spamming called volume spamming. And there's a subset of volume spamming that I'm calling ticker stuffing. And for those of you who don't know what a ticker is just kind of like a shitty candle. So most what we know as candles typically have these defined boundaries, but what CoinMarketCap and other aggregators generally ingest for the most part are ticker feeds. And tickers are like a 24-hour candle that ends whenever the exchange decides it should end. So it doesn't end at like the end of the day or, on minute boundaries. It just ends whenever it's computed. So it's timestamp of computation, open, close, high, low, and volume. And you can literally, if you get good at this, you can literally just go in and take that volume numbers you've got, open, close, high, low, volume, and you can just change it. You can just like add, you can say like, hey, whatever the figure is, like add $1 billion and send that right over to Coin Market Cap or whoever, and just pump up your volume. So the easiest way to do this is ticker stuffing, and you're just shoving volume in that candle. But there's a lot of other ways that it's done as well. But ticker stuffing is probably the most sort of frequent thing that we see.
Is this something like when I look at this, I part of me thinks like this is it's a problem for the industry because a lot of people pull data from CoinMarketCap. So they'll go and they'll point to, oh wow, the volume for Bitcoin today was $30 billion. Volume for whatever was X billion dollars or $1 million. and maybe they'll make some type of decision off of that. But then part of me thinks like, are people really? And maybe it is, but I'm trying to in some ways like think in my head, are retail traders or even institutions as well, or maybe just quote unquote more sophisticated traders, are they taking this data from CoinMarketCap and really falling for a lot of this stuff to like, that's something you said where it's maybe it becomes a self-fulfilling prophecy where you have F coin or whatever random exchange basically transaction mining or fake voluming their way to the top, and then they actually get users? Or is this just something where, maybe they're at the top, but you'd hope that people are actually looking at this and being like, well, I've never heard of this exchange once in my life, I'm not going to actually trade there.
Yeah. So what we've seen from our institutional customers is they've known about this happening for a long time. They're not believing the volumes. They're only trading on places that they trust. But I think the average consumer is probably the one that's suffering here, or people who haven't made this mistake yet. But yeah, it could, there's a lot of ways it can hurt you. So I don't think this fake volume generally for the higher market cap coins moves the price a ton. It doesn't look like it moves the price a ton. As you get further down, this volume can, especially if assets are being priced on a volume weighted basis. But I think there are a lot of ways that retail investors can get screwed. The first one is that they see all this fake volume and they assume that an exchange has liquidity, right? That they're
Yep.
going to be able to put forward a significant buy or sell order. Maybe if it's their if it they're like, hey, I want to take X number of dollars from my retirement or X percent of my retirement. I want to put it in Bitcoin, and they put through a trade, and those order books just aren't as deep as they look. I think the second thing is that when you see a top exchange on a place like CoinMarketCap, you might assume that it's secure, right? It's a reputable exchange. It's a top exchange on this listing. I mean, people have sort of similar assumptions when they go to Google and they search for loan, right? Like they just assume that Google's not going to put crap at the top of the list. So I think another aspect of this is it, when you're at the top of the listings, there's a certain amount of social proof that comes with that, right? If you're at the top of the listings day after day after day, um, you know, those rankings mean something, especially when a site is the top site in the space. So I think that's mostly how the space is affected, is it's affecting retail investors, and institutions aren't falling for this crap.
How if I'm a retail trader and I'm new to the space, how do I protect myself from the issue of fake volume? What do I look out for? Where do I look for data that isn't plagued with all this nonsense and kind of wash trading and just fuckery?
Yeah, it's a good point. So I guess here's a part where I'm gonna shill a bit. At nomics.com/exchanges, we have a list of exchanges with highly transparent data practices. And the impetus for this, like a lot of other aggregators work in this area, really comes from the Bitwise report. So when the Bitwise report came out, the first thing that we asked ourselves was, like, what do the good exchanges, what do these 10 good exchanges have in common? And what we noticed is that of the 10 that Bitwise explicitly like kind of blesses as being good, of course, that's stuck in time. And like the day after the report came out, one of them could have become a bad actor. Multiple ones could have become bad actors. But what do these 10 exchanges have in common? And what we found was 8 out of the 10 exchanges that Bitwise bless provide full trade history. So, not only are they providing the highest granularity trade data available, but they're providing that data available back to the inception of the trading pairs on those exchanges. And that's, of course, no guarantee that they're not faking that data. But we kind of think about this like an IRS audit. If you were being audited by the IRS, you probably wouldn't want to give them every receipt. You'd want to give them kind of aggregate summary reports on your financials, and you would want to give them like the least amount of history possible. So, something like summary level data for like maybe a year or two. If you start giving them receipts and you go back, since the very beginning of your spending on all your accounts, they're gonna find stuff that you didn't even find. Like, there's probably gonna be things you did that you didn't report, even if it's not on purpose. So we found that, like, 8 out of 10 of the good actors, are providing this super high quality data, and then when we looked at the exchanges that Bitwise called out as doing a lot of bad things, things that were obviously not good, we found that all of those exchanges, so they explicitly called out 16 as doing not great things, but the assumption is all the others are doing bad things too. But of the 16 that they called out, 14 of those 16 only provide ticker data with no history. So, the worst form of data possible with no history, whereas the good actors were like the high granularity data with full history. So we created our exchange ranking index where we sort first by the transparency of these exchanges, and then we sort by volume. So like Binance is usually at the top of the list. OKX is not at the list because they don't provide a lot of a lot of transparency in general. And these exchanges are all exchanges you've heard of. Like if you go to our exchange rankings,
I'll pull
you'll
it up.
see you'll see you'll see exchanges that you've heard of, for the most part,
Got it.
and
Yeah.
probably exchanges you've made trades on and stuff. Like Coinbase, Binance, Kraken, Poloniex, Gemini, etc.
So looking at the ranking right now, we have on the top Binance, Bithumb, Coinbase Pro, Kraken, Bitstamp, Poloniex, Ethernex, Gemini, Bitflyer, a lot of the ones people have heard of. And on the bottom, we have Mercatox, Coinbene, Itbit. Um, Itbit's interesting with the D. Maybe you could speak a
Yep.
little bit of that because I think Itbit is Paxos, and maybe Itbit was actually, if I'm remembering correctly, Itbit was actually listed in the Bitwise report as one of the 10 trusted exchanges. Is it more of a data kind of issue there with them?
Yeah, no, so that's I think that's important to note here. When we put out these rankings, a lot of people came to us and they told us about, maybe exchanges that we labeled as a D in terms of transparency, but maybe they thought were good actors. And then there are other exchanges that have done you know, things, maybe they had bad customer service or someone had a bad experience that we labeled an A. And so, we've been very clear that this is an exchange transparency ranking. This isn't a overall, all your business
Endorsement.
practices are great. So Itbit is we're actually in conversations with them about their data transparency practices, and we expect that within a few months here, we'll be able to get much better data from them. So we think they're going to bump up the rankings. But yeah, Itbit right now only provides ticker data, and they don't provide really any history at all. So that's why they're there. And then there's some, we have some obscure exchanges that have an A rating, but they've got really fantastic data practices. So that's why they're there. Whereas if you go to like Coin Market Cap right now, they've cleaned some things up a little bit, but you've got like Coineal is number 4. I have no idea what Coineal is. I really have not even heard of it.
Not real.
Um, yeah, I don't think it's a real exchange. You've got ZBG in there. You've got Coinbene was like the quintessential bad actor in
Yeah,
in the Bitwise report. Like if there was a villain in the Bitwise report, it was Coin. I pronounce
I
sometimes I
can.
call it Coin Bean. I'm like, is that Coinbene or Coin Bean? I have no idea, but
I'll
that's
try and pull it up as you're talking to see if I can get a live look at some of the just wash trading that's happening. The charts are just the volume on a lot of these pairs is the most ridiculously funny thing on the planet. It's just straight up. I don't know if you can see this, but I'm pulling up it's an ETH pair. It's ZAT to ETH. and it is just straight green red candles across. It's my favorite thing on the planet looking at this. And then like the order book is like empty, but there's a ton of trades happening. Like there's I think 10 trades on this order book.
That's
Or actually
hilarious.
10 orders on the book, but there's trades happening every 5 seconds. It's incredible.
Yeah. Yeah, you don't even have to be, like, good to spot this stuff anymore. It's hilarious. So, like, yeah, so Coinbase was, like, the villain of the Bitwise report, and, CoinMarketCap has it as their, like, number 9 exchange. I was on, what was it? Uh Bitwise put out another report, a full white paper where they mentioned that Fcoin was the top exchange by volume on CoinMarketCap in April. And yesterday I was on CoinMarketCap and they had an ad for Fcoin. I was like, wow. And the ad was speaking to their trading volume. It was like, wow, we have the X number of Bitcoin are transacted per day on our exchange, according to CoinMarketCap. And I was like, this is a huge conflict of interest. But yeah, you don't have to be brilliant to spot this stuff. I think it's a lot like like email spam back in the day. So, you know, way back in the day, people would just buy these CDs with email addresses and they'd spam everyone, and it would say things like, porn or Viagra or whatever they were selling. And then folks like Gmail came along and they said, all right, anything with these words with this density, we're going to flag and put into the spam folder. And then the spammers were like, okay, we're just going to use an O. I'm sorry, a zero instead of an O in porn. And, we're going to swap out these characters. We're going to use a one instead of an L. And then, Gmail caught that. And then they came back again and they're like, all right, we're going to put the entire message in an image. And that way we can say whatever we want. And then Google started looking at the ratio of text to images, and it's just an arms race. And so folks have asked me, like, how are you going to fix this? And I don't think there's there's like, I don't think this is a one and done thing. I think this is going to be a constant process. That's why we've got the spam team here at Nomics. It's never going to be fixed. It's People are going to get more sophisticated over time, especially when you consider how decentralized the space is. The fact that anyone can, with like 0x start up an exchange basically in a weekend. We're gonna have security token exchanges, non-fungible exchanges. We're gonna have local exchange. I mean, I think we're just gonna see more exchanges, and this is gonna be a harder and harder problem to spot over time. But yeah, right now they're just doing just like total shenanigans, like tons of trades going through, but flat order books, or sometimes we see these huge order books and no very little trading volume. And then sometimes we'll get the trades from an exchange and we'll add up all, when we know we have gapless data. So some of these exchanges they'll give each trade a unique identifier. So each trade increments by one. And so we actually know that we have all the trades that have happened during a day. And then we'll see the candles that they'll send over. And the candles will have like a gajillion dollars more volume than the individual trades added up. Or what's another thing that we see? Sometimes we'll see, if there's a bid ask spread, sometimes we'll see these bids leap across, like pole vault across the ask, and some order will be filled like way out of market, something for some ridiculous price for some shit coin. And that order will be placed. It's like, how does a matching engine even like make that happen? You can't snipe off orders from the order book. So I mean, you can on some decentralized exchanges, but just the it's just like amateur hour right now. You
Yeah.
could do anything and get away with it.
So kind of going to the opposite end of some of I mean, I think it's pretty clear at this point in time that there is a lot of shenanigans, a lot of bad things happening in the crypto space from an exchange perspective. But you've been in the industry, kind of working hand in hand with these exchanges for over a year now, really. What are some of the good exchanges doing outside of the data? Like, how have things progressed in the past year where things might actually be looking positive outside of the BS, fake volume, wash trading, like with some of the legit exchanges?
Yeah, I think the main thing that seems to be changing is that these exchanges are starting to take their data practices a lot more seriously. So, Coin Market Cap, as far as I know, was the very first aggregator, and all they required was a ticker feed because it's really easy to start ingesting data from an exchange with a ticker feed. It's like 5, 6 data points, and so an exchange would get up and running, and the first thing they wanted to do when they were live to get distribution for their markets is it's like, hey, we got to throw up a ticker so we can get listed on CoinMarketCap. And and that's smart in a lot of ways, with like the New York Stock Exchange and the Nasdaq. There's only really two big exchanges in the United States when it comes to stocks, and they have a monopoly on the data. So they charge an arm and a leg for their data. But if you're a crypto exchange, a lot of times your data is like this distribution channel. It's a good way to advertise what your product is, and if your products are these trading pairs where you make some money every time a trade goes across them, it really behooves you to share data. So these exchanges at the beginning were doing the very bare minimum. It's like CoinMarketCap needs a ticker feed. We'll give them a ticker feed, and then they would essentially after that they would ignore their data altogether. Maybe at some point a market maker would come to them and say, we'd like order book data. So they'd come through and they'd just provide order book data snapshots, or something through a WebSocket, but no historical order book data. And to this day, almost nobody provides. I can't off the top of my head think of one exchange that provides historical order book data. I don't think anyone does that. Um, so what we're seeing is that data practices to a much greater extent since this report, and since folks like us and others have done things to improve the state, or to add some kind of filtering, is exchanges are realizing that they need to do more than the bare minimum around data, and they need to provide an audit trail, and they really need to step up their game if they want institutional investors to take them seriously. The problem is that so many of these exchanges, I mean, so many of these exchanges have been, fudging data, and it's like this arms race of like volume spamming, where it's like you have to, in order to be at all taken seriously, you have to get past everyone else who's also faking volume. So I don't think we'll see anytime soon exchanges opening up full history, but they'll probably say like, "Hey, we're going to start on this date, and moving forward, data is going to be available." I was talking to one exchange, and I said, "Hey, like in order to add you, we need full, or to give you an rating, we need like full trade history." And they said, I'll never forget this. They're like, "Oh yeah, no, we just don't keep it." Like, are you kidding me? Like, hard drive space is super cheap. He's like, "Yeah, it's too expensive." No, it's not. It's not too expensive. Like, the hard part is not storing it. It's everything else. So I think they were probably just lying, and we get lied to all the time.
As somebody in the crypto blockchain world who sells your API to professional sophisticated traders, institutional investors, whoever it might be. I'm curious, as far as the past like year or so, how have the conversations been reflective of the price? Has the recent bounce back in 2019, do you feel like that's brought more interest back into crypto, or specifically into the data surrounding crypto, or have the conversations for you remained relatively stable, kind of regardless of price, since it is maybe a more sophisticated class of trader that you're mostly speaking with?
Yeah, so our website traffic has gone up with the prices, but the API business and the data business it's growing, in like, it's not it doesn't seem to be correlated with prices. Like, we were growing even when the market was down. We're just a lot like a utility company. It's this boring basics kind of business, and yeah, we're not seeing uh, sales of the API rise and fall based on
Well, that's a
the
good thing.
market cap. Yeah, it's mostly correlated with like how good of a job we're doing marketing that business.
Yeah, totally. And when you look at just kind of like where the market is going, what type of features or kind of functionality in the trading ecosystem do you think needs to come into place, maybe outside of data? Obviously, yourself and other individuals are working to improve the level of the quality and the transparency of data for trading. But what else is there in the industry that needs to happen for this to just kind of continue to move in a more, let's say, professional manner?
Yeah. I I really think that the biggest products we don't need another fork of Bitcoin. We don't need another fork of Ethereum or Zcash. What we need, I think, is Bitcoin infrastructure. I think the Lightning Network needs to grow. I think we need more and better ways to earn interest and to borrow, preferably in trustless ways against those assets. I think that it's just sort of the continued integration of really Bitcoin first and foremost into our daily financial lives. And it's happening. I think at the very beginning it was about like, it was about these tokens, but I love what I see, like, Wire doing, and folks like Nexo or other loan based products. But or what Casa is doing with sort of these lightning nodes in people's homes. I think it's more of that kind of thing. I don't know. What do you think?
Yeah, I think I would echo those sentiments. Like I think that it's been interesting to watch as the quote unquote bear market happened. I think it was a good cleansing of the space from a lot of either just bad actors or a lot of people that raised money with just no intention of actually doing anything with it. And then there were kind of a subset, I think, of people that continued to just kind of grind through it. And whether that has been on the Bitcoin side, like you said, Casa, I have a node kind of sitting a few feet away from me, which I think
Yeah,
is
me
a
too.
it's a pretty cool product. I like it. So whether it's kind of advancements with Bitcoin and with Lightning, or there have been a lot of, I think the narrative around like DeFi with Ethereum has been pretty interesting to watch. Whether that's like the growth in MakerDAO CDPs, or compound finance and borrow lending, or the BlockFis and the Nexos of the world. I think there's just been a lot of kind of increased like utility of actually owning these assets, and the protocol development on the base layer of Bitcoin and the base layer of Ethereum on some of these other assets as well has been pretty good to watch. So I think all things being considered, I think the industry as a whole is moving in a positive direction, and it's just kind of people want things to happen quicker because there is usually a price associated with basically everything in the industry, and it doesn't necessarily rely on any type of fundamentals at all. But it's something they kind of have to either have some type of long term conviction and be patient on, or or get out kind of.
Yeah. Yeah, I completely agree. Like, if you think about the development of the internet, there was like, TCP/IP, and then HTTP, and then HTML and CSS, and I think a lot of people are expecting full on startups that can do things like Uber and Airbnb. We're just not there.
Yeah.
The tech stack is super, super, super early. We're still trying to get things like custody right. So I think the foundation is people's expectations is like they've just seen like Instagram come and then blow up, or
Yeah.
we've seen all these things that have benefited from literally 2 decades of hardcore innovation on top of the internet. And we're only 1 decade in right now, so we don't have our Airbnb or Ubers just yet, but I think it's coming.
Yeah, and it's like if you had TCP/IP shares that you could publicly trade on a daily basis, 24/7, 365 too. It just adds in a whole level of complexity and removes, I think, a lot of any patience, and it gives the nice dopamine hit when you look at the charts and things like that. But it's very interesting in the short, and I think long term too, just kind of how you can break down the perspectives and look at things for sure.
Yeah. Yeah, absolutely. Absolutely. I think, you know, kind of something that's different during this bull market versus the last one is I think we've just got a lot more sophistication among institutional investors, but also among individuals. And I think, the conversation that we're having about data is is part of that. So, um, it's my understanding that there are so many more people that understand blockchain data and how blockchains work than understand how the exchange ecosystem works. We do this weekly webinar at Nomics where we go over like here's an exchange here's how a Bitcoin exchange works. Here's market data 101. And we have people from like large banks and analysts that are like didn't know how this stuff actually works. But more and more people do understand how this stuff works. When people come to us to buy data, the biggest problem we have is that people literally don't even know, in many cases, how to ask for what they want. And they literally don't know how to specify what they're looking for. Because yeah, there's a lot of similarities to sort of traditional exchanges, but it's sort of this mix of like traditional exchanges and forex minus regulation, minus quality controls. It's completely different. But I love seeing the infrastructure come together. I love to see people's understanding of the space improve, and I think we're well on our way. I don't think we're going to see like Bitcoin at this is for entertainment purposes only. I don't think we're going to see Bitcoin at like 4 grand again. I think those days are long gone.
I I I
Fingers
hope so.
crossed.
I hope so. But yeah, I do tend to agree with just the commentary around infrastructure. I think that when you look back at how primitive and just general shitty a lot of the infrastructure was in 2017, that carried the entire crypto market to $800 billion. And just the exchanges and the level of support and basically everything about the market in 2017 was, whether it was centralized exchanges, they just weren't ready for it. Decentralized exchanges, the biggest decentralized exchange, really the only one at the time, was Ether Delta.
Yep.
So there are just so many more on ramps and just such a broader variety of products, and that have had really 2 years at this point in time, or a year and a half at least, to kind of like season out and flesh out a lot of the technical issues, and as well as just people issues with support and kind of building that out. That's been good to watch. One kind of question that I'm a little bit curious on, as far as working with the professional traders that you do, that receive data from these exchanges that you provide to them. Another area that seems to be pretty hot right now is on-chain data as well. I know that's not something that you necessarily do with Nomics, but are you seeing professional traders kind of utilizing some type of combination of the Nomics API with maybe something from Coinmetrics or from some other place, where they're trying to utilize exchange data and on-chain metrics at the same point to just create better investments or better trading strategies?
Yeah, I still think that's a pretty. So the answer is yes. It's still a pretty sort of niche data need.
Hmm.
Most investors in the space don't have a highly reliable, in the sense that it like stands up to back tests hypothesis about what to do with on-chain data. If there's more addresses, those could potentially be from the same people, so that could point to an increasing awareness in security, or how Chainalysis
Hmm.
is crawling the chain. So what do more addresses mean? What does transaction volume on the Bitcoin network mean? Does it mean that more people are moving their coins to exchanges because they're going to sell, or does it mean that they want to change it for exchange it for something else? So I haven't I personally don't know of more than like a handful of funds funds with active strategies that have really robust hypotheses around on-chain data that they're willing to put a lot of money behind. So I think that space is still, I think it's still somewhat new, and I think the further away you get from like just really Bitcoin and Ethereum, the less predictability that kind of data has. If you go to like EOS or whatever, there's just the people are just making up transactions, and there's plenty of transaction or blockchains where transactions are really really cheap, and it's not necessarily clear what's happening when transactions are taking place. So yeah, I, we're still not getting a ton of requests for on-chain data. I'm honestly not sure. I mean, like we evaluate, the data space. I'm not sure there's a mature, in my opinion, there isn't right now a mature large market for on-chain data.
Yeah,
I question whether or not a startup is going to generate enough capital with on-chain data to hire top talent and continue to grow. I think that that space and that ecosystem is not yet very commercially viable. I think it's something that a lot of people want to look at, and it's like nobody wants less data, but in terms of people willing to pay cold hard cash, you know, in large amounts that would justify, top engineers and continued R&D. I don't know that exists right now.
totally. And one thing you mentioned was chain analysis and other other types of those like blockchain analytics companies. How does that factor in at all to examining the kind of exchange data? Or is that more of like an outlier on ramp, off ramp type thing? I'm just kind of curious if that has any type of play into the perceived trustworthiness or quality of data, if any specific exchange might leverage something like a chain analysis.
Yeah. So the people that come to us typically they're looking for data so that they can make more money. Chainalysis and those folks or services like them, it's more around regulation, security, forensics.
Yeah.
Someone stole my Bitcoin. Where did it go? Or exchanges like Coinbase have purportedly used tools like that to make sure that dirty money isn't getting into their wallet. So I honestly have very little visibility into people's forensic needs or needs for this data around regulatory purposes. It's more around making cash, generating returns.
Awesome. So I mean, as far as everything goes, I think we've covered quite a bit
Yeah.
with the general topic of the kind of nonsense around cryptocurrency exchanges, how somebody can potentially protect themselves around the issues that are happening right now. Is there anything maybe we didn't cover you would like to just kind of add on to at this point?
Um, I mean, nothing huge stands out other than like I saw a tweet from Circle the other day. They were talking about the state of Poloniex when they purchased it. They had something like thousands upon thousands of open tickets
It's like
when
190
they purchased.
something thousand.
It was like 190 something thousand, and I remember there was a point in 2017 where everyone was using Poloniex. I mean, at one point it was the
Top
top
dog.
exchange. Yeah, it was a top dog. So to kind of be in a place where the top dog exchange has hundreds, 100,000 plus open tickets to a place now where the top exchanges that people are using like have a solid, they have solid operations in place. They are answering their support tickets for the most part. It's really refreshing, and I think we're just in a very different place right now in 2017 than we were in 2019, and it's great to see real operators coming in. I think back in the day, it was like any project with someone with a vaguely impressive pedigree, was getting funded because VCs and investors really didn't know who to back at that time. So you'd see people where you'd look at them and it'd be like, okay, Stanford computer science, X Airbnb, X X Coinbase or something, and then you dig into it and you realize, all right, they were like an intern at Coinbase, they dropped out of Stanford, and they were like
Oh,
a product
true.
manager at Airbnb for like 8 months or something like that. And like, how did that guy get funded?
But Coinbase
So there's
Mafia.
yeah. Yeah, so it's really great to see people with real experience, I think, building out companies, and I think the VC money is getting smarter. They're demanding roles on boards, which there's this sort of hardcore bootstrapper part of me that's like, no, VCs shouldn't be on boards. But actually, my experience with VCs on boards is there's it makes for good governance. So the governance on these companies is getting better. And I think that the space is just up leveling over and over and over again. I think we're still going to continue to like we're going to be embarrassed over and again and again and again, just like we were embarrassed by the Bitwise report. I mean, the space was, but it just keeps on getting better, and it's encouraging to see.
Yeah, that's I'm on board with a lot of the things you said. I think there's a lot of good to be drawn from what's happened recently, and just a lot of general improvements. And I think a lot of that has just been kind of like societal pressure or like community pressure, which has been trying to cleanse out a lot of the bad actors, and that's been nice. Just because you feel a little bit better, about operating in the ecosystem. There's still a lot of issues where you look at and you're like, this is a weird place to work full time, but outside of that, it's I think still moving in the right direction. Hopefully, not getting worse at least, because for some points in times it couldn't get much worse.
Oh my gosh, yeah, yeah, for sure, for sure. I mean, it's yeah, yeah, it's less of an amateur hour environment than it used to be. Thank God.
Yeah, yeah. So for anyone who is just not familiar with your work or where they can find you, fill everybody in on the best place to find what you and the team are doing and what you're up to.
Yeah, so probably the best place to go is our website nomics.com. We have our exchange index there and exchange ratings, and we're about to come out with transparency volume ratings for individual crypto assets. So not only will you be able to see how transparent a exchange is, but you'll be able to look at how much volume for a given coin is coming from reputable exchanges. So what's the transparency volume percentage? So we're coming out with that, and I'm excited about it. You can find me at Twitter at Clay Collins, and I have a podcast as well called Flippening, which is also a lot of fun. You can just search for Flippening Podcast on Google and find me there. But I answer questions on Twitter. If anyone wants to chat, let me know.
I'll put links to all those in the YouTube and podcast descriptions so you can find that. But really do appreciate the time, Clay. Thanks so much.
Thanks for having me on.